All right, everybody, welcome back to another live stream. Got 155 people in here. Hope you're all doing well. Thanks for being back on another one. I am running solo. I'm not sure where the editors are. I think they're maybe they got snowed in. We got some really cold weather here in the United States, specifically northern cities got it worse, but we're starting to get it down here in the South where we're at. So hopefully anybody who is also in the South, try and stay warm, try and stay safe. And let's talk about some markets here in the meantime. Big movements on gold here. And this is largely in part due to the US dollar. And actually, there's a lot to cover here today. We do have some numbers coming out here. We've got CAD CPI coming out this morning. Not usually the biggest news, but still has the potential to move markets. And noticeably, we also have the Empire State Manufacturing Index. And this number actually could be pretty market moving. Let me see if I can show this to you. So the Empire State Manufacturing Index, if you're somebody watching gold, if you're somebody watching indices, that should have a good impact today. In terms of time, we're talking 8 minutes out from now. Sorry, I had to mute my mic. I'm still getting over a cold, so I apologize. I sound terrible. So there it goes again. Headphone warning, sorry. Empire State Manufacturing Index comes out in about 7.5 minutes. The idea here basically is that above a 0 indicates improving conditions and below indicates worsening conditions. This is, of course, surveying manufacturers. And this is a pretty good indicator. It's an important one for economic health and should be interesting to watch going forward. Where's your beautiful face? I appreciate the compliment. However, no webcam for me today. I'm at home and I do not have a webcam at my home office. I'm still kind of also sick, so I'm not particularly wanting to get on camera at this time, but I still made it out for you guys. Taking a look at the charts. Look at this dollar breakout. You had a huge move here following this consolidation. And this is actually pretty common when it comes to price action, when it comes to charting. When you see something ranging for a substantial amount of time, eventually it has a strong breakout one way or the other, usually, right? So that's what we're seeing here today. So this idea here, big break to the upside. So how do you play this? Well, first of all, I got to say, it's definitely doing more than I thought it would. This is a pretty bullish move here for the dollar. And it does look like most likely it is headed to retest this next area of resistance, that 104 mark. So what do you do with this? Well, if you're dollar bearish like me, then you acknowledge that at least for now, it seems like the bulls have won the day. And that's totally okay to admit. I mean, if you're bearish or bullish on something and it moves against you, it's actually quite responsible to acknowledge, hey, you know what? The bulls had their day today. This is a strong breakout here to the upside for dollar bulls. So if you take a look now at like the 4-hour chart, we drop it down just a little bit. You can see that range broke out to the upside and immediately had some good follow through. This is bringing the indices down here this morning. You can see the S&P 500 is pulling back. And to be completely honest with you guys, there's a couple setups that I'm looking at here in reaction to this dollar index move. My caution, though, is that do I really want to get super bearish on the dollar with this much strength? I mean, here's me having to bite my tongue here and just acknowledge what we're seeing. We see a breakout. We see strength, right? So my point with that is a good trader is not stubborn and angry when they're wrong. A good trader reacts accordingly. How about the fundamental data? Well, it does seem like at least what's causing this move, from what I could gather, it seems like expectations for rate cuts were a little bit diminished. And any sign of rate cuts getting pushed back due to perhaps a stronger than expected economy could certainly cause the dollar to push higher. It's a pretty valid reason for why it could be up today, and also noticeably why gold is down. Is this gold pullback a buy? Well, let me be really honest with you guys. I actually thought we would have already bounced by now. We're seeing price break through that support. So that's not giving me very much confirmation to be a buyer at these levels when it comes to gold. Again, what you'll notice here is not only are we coming down, but it seems like, guys, we are accelerating. So that has me a little bit cautious when it comes to the gold market. Let's see what else we can get off of the Edge Finder here real quick. In terms of setups, the algorithm has printed out some setups here for us here today. We've got a pretty good mix. I'm going to take out the neutrals so we can get a good read. Okay, guys. So what we are looking at is the Edge Finders. So what the Edge Finder does for newer viewers or even people who just want a refresher, the Edge Finder takes into account lots of different market data, inflation statistics, labor stats, interest rates, the economy, seasonality, retail sentiment, the commitment of traders data. It looks at all of these factors for you, generates scoring for each column for each asset. Okay. Then with that score, it generates a bias. Now, this bias is not a holy grail signal to go buy or sell something, and that's not how we advertise the tool. However, it helps us to spot possible opportunities. If you guys saw my S&P trade last year, end of the year, we caught a huge, very bullish reading on the S&P 500 and rode that thing for a massive, massive move. So what do we currently have? Well, we have oil as bullish. I don't like the chart, and I'll go look at that. If you've seen oil, it's been range bound. If we see a breakout, I'm watching oil. We're getting a +7. That's a strong reading. Same thing with the Dow. Euro Aussie, Euro Kiwi, Euro Yen, Dollar Yen, Euro CAD. Now you might notice, Nick, there's all sorts of different charts here. What do you trade? I trade lots of different things. I trade currencies, I trade commodities, I trade indices. I will say indices are my favorite, but I do trade pretty much everything. On the bearish side, we have a couple currency crosses. Seems like our Pacific currencies are getting some not so much love, right? The opposite, they get some hate. Aussie dollar, Kiwi Swiss, Aussie Swiss, getting some bearish readings here on the Edge Finder. By the way, guys, we are very close to our news event. We've got Empire State Manufacturing Index. Going to be honest, this is the one I care most about. If you're somebody who's watching Canadian dollar currency crosses, absolutely, CPI also matters. And to be completely fair, CPI matters to gold traders for Canada because cooling inflation, good for gold, even though it's not even quoted in Canadian dollars, it's still good for gold. We want to see a trend amongst central banks towards inflation cooling, interest rate cuts. That's what you want to see if you're a gold bull here today. We'll see how that plays out. Let me go ahead and set up my charts here so that we can react a little bit to this. Man, guys, I need my coffee this morning. I sound like the Grinch. I promise I sound absolutely awful, but I'm fine. I actually feel a tremendous amount better. But you know that late stage of a cough or cold when you start to sound like an absolute monster? That's me right now. So my voice is, I promise, I actually feel 10 times better than I did yesterday. I'm just groggy. Okay, guys, we are very close. Coming in, breaking news on our numbers here this morning. Let's see what we get out of Empire State Manufacturing and CAD CPI. I'm going to switch this over to dollar CAD here real quick. All right. A little bit of a reaction here. USD CAD blipped down. You guys saw that? That was a weird move. Gold bouncing slightly. S&P 500 on the bottom right. Oil not making too much move. There goes dollar CAD. For my FX day traders, watch the CAD here this morning. Seems like it's got some volatility. Dollar CAD trading lower here. Let's go take a look at that. And it seems like it's kind of breaking this this upward march that was happening, just consistent bullish going on, bullish trend going on, kind of lost its steam coming down. That's 3 candles potentially to the downside. Could signal a bigger reversal is starting on the dollar CAD. And, you know, does that actually set me up for oil being stronger? Curious. Not quite. Remember, as I said, guys, oil is actually something that I am more on the bullish side of. I'll show this to you. U.S. oil getting a +7 on the Edge Finder. Labor market stats, relatively strong. Inflationary stats, you know, cooling, but also kind of relatively still high. U.S. oil getting a nice read. I like oil on the long side. I'll keep watching that. That also goes well with the position that I currently have open. And probably, if you guys are regular viewers, you know I already have this open. I sold puts on XLE. Not going super well, but rebounded a lot from its lows. We'll continue to watch that. That is, of course, the energy ETF. If oil goes up, typically, not always, it does lift most of the energy stocks. As you can probably imagine, if you're an oil company and the price of oil went up, that would probably help your share, right? Quick look at the S&P 500. Volatility is likely to come back in, but I have to say, I traded the pullback here on the S&P, and I'm just a little bit cautious. We're still in this range. To be honest with you on the S&P, I would either like to try and buy the pullback here or wait for a break and retest. But at current levels, there's nothing for me to do. I can get fancy on the 4-hour chart, you know, if you want to kind of get down here and trade zone to zone, etc. But for me, really the bigger picture here is I need to know on the daily chart, where are we likely to go next? And again, we're bumping up against resistance here. So I'm waiting for either a pullback so I can kind of hold this range. I don't mind trading this range if I get kind of the lower limits of that range. So I'm watching that close. S&P not quite at a place to play it yet. Let's take a look at gold. Look at that candle, guys. That's a pretty good reaction. Also, I didn't even look at the numbers. That's how you can tell I'm feeling sick. Look at that. Wow. Big surprise lower here on Empire State Manufacturing. Hold on one second, guys. My cat is screaming at the door. I don't know. Does anybody else have cats? They do something really crazy where probably dogs too. I've never had a dog, but my cat will come stand at the door when I'm in my office doing work or something, scream at the door, want to be let in. I let her in and she's doing it right now. I'm looking at her right now. She's walking back over to the door and pretty soon you might hear a little scream to be let back out. It makes no sense. Anyways, the life of a cat, you know, they don't worry about financial markets all day long. So who's the real crazy one? Anyways, guys, I mentioned the Edge Finder still giving us bullish readings on oil and US 30. Also, guys, we are offering trials of the Edge Finder right now. If you don't have the Edge Finder and you want to trial it out, got a link here for you. We're going to drop it here in the chat for you. If you would like to trial our software, we just launched recently a program where you can try out our software for 30 full days. So if you would like to try out the software, fill out this form. Here is the application right there on your screen. If you're watching with me live, click the link that's just been dropped in the live chat. And if you're watching this back at a later time, I know a lot of people watch these streams afterwards, you should be able to find that link in the description as well. So what else can we look at here today? Also, Edge Finder users, I think the put call ratio is officially done. And this is an absolutely really, really cool indicator that we worked really hard on getting set up. Essentially what this shows you guys, it's another sentiment indicator. So for my friends who love sentiment indicators, looking at what the crowd is thinking about something, the put call ratio measures how many puts, how many calls are being bought. If you don't know what that is, and if you think it's not relevant to you, then bear with me. Puts are bearish bets in the stock market. Calls are bullish bets in the stock market. That sentiment extends to all other markets, because if people are super bullish on equities, stocks, etc., that could indicate that they're feeling really optimistic about the outlook. And that could play out in other currency crosses if you understand the fundamentals. It could impact commodities, certainly, as well. So something to think about. When this reading is getting lower, it's telling you that sentiment is getting more bullish. And when this reading is getting higher or more extreme, it's showing you that sentiment is more bearish. Now, what I like to see is if I'm bullish, I don't mind it being mildly in the bullish territory. But once it starts creeping too far to the downside, that's telling us that sentiment is a little bit too bullish and perhaps could be a time to take profits, trail stops, or close out trades entirely. Something that we'll think about, the put call ratio, really cool indicator. I'm really excited that we got it all set up in there. You can see the current reading is 0.88. That's telling you that there's more calls in the market than puts. Very cool indicator. Again, get a trial. We just dropped the link in the chat. You want to try out our software, feel free to do so. The link there is in the chat as we speak. All right, let's see what else we can get into, guys. Today is Tuesday, so we are not yet getting, by the way, quick data lesson. We get the AAII Investor Sentiment Survey on Thursdays, I do believe, and we get the COT data on Fridays. So we have some new data around the corner, which should be interesting. And of course, we'll monitor that on the streams and videos as well. So back to the charts, look at that move on gold. That's an impressive close, to be honest with you. That is actually pretty resilient. Same thing with the S&P 500, despite what seems to be a pretty disappointing manufacturing index here today. And look at this. So for those of you wondering, why did the Canadian dollar strengthen? It's because inflation numbers were hot in Canada, which could signal perhaps that idea of the Bank of Canada being the first one to rate cut could be a little bit far-fetched. I mean, I don't particularly track the Bank of Canada too closely. However, I do know that they are one of the first expected to rate cut this year. And definitely one to watch. The Australian dollar just can't seem to catch a bid. And for those of you who are watching this currency cross, I do think that if price rebounds here a little bit, my opinion would be path of least resistance would be still more downside to come. This cross is moving lower pretty quick. And if you are a dollar bull, I would say if I was a dollar bull, the pair I'd be looking at would be the Australian dollar versus the US dollar. They're not expected to rate cut as soon. And again, they're very fearful of recession. So kind of a different narrative than we have currently in the US. And that difference in narrative is being reflected in the chart. So again, I think if you get a pullback on this one, it could be due for more moves to the downside. Taking a look at the euro, same thing happening. We're seeing a move lower here today. Kind of this upward channel, not looking so upward anymore, right? Price seems to have fallen apart there. I'm feeling pretty good that I did end up closing out of my euro dollar long position. I'll show you where that position was. I entered euro dollar right around here, and I ended up closing it right around here. You may ask, why the heck, Nick, would you close your trade? Nothing even happened. It just went sideways, and then you closed your trade. I'll tell you why I did close my trade. And members, you probably remember what I said in the group, which was today's CPI data. This was last week. CPI data was a little bit concerning for my dollar bearish outlook. Now, of course, I closed this trade for a very small profit on the euro dollar, but I saved myself just by understanding the fundamentals. I mean, obviously, we had PPI the next day, which was cooler than expected, so I didn't know that was going to happen, but I feel pretty validated. You know, the big, you know, what was going to drive the euro dollar higher was CPI, and it didn't do that. So I went out of the trade. I closed out of the trade based on a fundamental trigger, right? Not a technical trigger. I closed my trade because of a fundamental trigger, right? So it is still sitting at support to the bull's credit. We have not necessarily broken this level. So if I was to enter the trade again, it would have been this area. But again, let's go take a look. Is the euro dollar, what's the scan for the edge finder? No more bullish idea on the edge finder. And that I'm glad that euro dollar 0, right? So we're just getting a neutral read from the edge finder. So that I'm feeling glad that I got out of that trade when I did. USD CAD getting a bullish reading here today. Interesting. I bet you that's setting up a good like pullback looking chart. Yep, dollar CAD pullback. I don't particularly love it. It's not a currency pair that I trade very often. Dollar yen getting a bullish reading. That's interesting. What is giving this a bullish reading here today? Let's take a look. Pretty reasonable sized reversal here. When looking at UJ. Not quite at like a pullback level I like. But what is giving us that +5? COT is positive. Retail sentiment. Crowd is betting against the dollar yen. Seasonally, not a great time. Trend to the upside. Economic stats, inflation stats. Okay. Still top setup for me right now is actually still oil. Again, not a market that is the most popular market to trade, but if we do get a breakout on oil, technically I'm kind of already exposed to this market with my XLE puts. But just watching it. Nick, are you sick? Yes, I am. Why are you not sounding like Nick? I'm sick right now, guys. Recovering. I feel a lot better right now. I mentioned this earlier, but it's like when you are sick and the last few days, like the last day or two of when you're sick, you sound the worst. And it's because like, somebody medical could tell us why that is, I bet. But I feel like maybe my best guess is like whatever was in your system is in the process of exiting. Oh, you like my voice? I don't think I can go much higher than where I'm at, to be honest. This is the highest it goes right now. I bet you I could go really low. Should I try and give you the lowest voice I can, guys? Gosh, what did I sign myself up for? Appreciate you guys. No, I promise. I sound terrible, but I genuinely feel a lot better. And I still just have, a lot of stuff to get done, even when I'm sick. So, but I am able to do it today from home. It is really cold in the US, so. All right, let's keep going. Take a look at some other charts. Pound dollar. Let's see what's going on with the pound. Pound overall trending higher. And I will say, I do actually really like the pound on the long side this year. At least for now. The reason for that is because the Bank of England is actually not expected to rate cut nearly as soon or as quickly as the US. So when you take those two things and you understand interest rates are the driving force, if you're an FX trader, if you are a primarily FX trader, which I am not only a FX trader, FX is something I trade, but if you are only an FX trader and you want to get into fundamentals, my number one thing to consider, I would say, is interest rates. Understand interest rate projections. And we do have some stats on this that might be helpful to you, if I remember correctly, and if this loads today. Interest rate projections. I haven't even opened this page in a minute, so we'll see if it does load. There it is. Okay, interest rate projections are the number one thing. If you are an FX trader and you want to use fundamentals in your trading, 100% you should be using interest rate projections and outlooks. Hold on, I got to open the door. My cat is screaming again. Come on. See ya. So what I'm pointing at is interest rates are everything for currencies. 100% everything. They're so important because interest rates bake in a lot of the other stuff. They bake in inflation. They bake in economic figures. Interest rates are everything. So my point with that is that if you see, projections, you can select this. I don't know if everybody knows this. This page is really, really cool. You can select any of the currencies and it will give you their respective general bank outlooks for rate cuts or rate hikes. Okay. Now look at the US. They're expecting rate cuts this year. Okay. Now look at UK. You see the difference? The point is, if one is rate hiking and the other is not, or I'm sorry, rate cutting and the other is not, that divergence creates massive trends on currency pairs. It does on indices as well, but they focus mostly on the Fed. If you're an FX trader, you need to be looking at other central banks, not just the Fed. So you have to look at when you're talking FX, you can't just look at one central bank. You have to look at, again, currency crosses. If you're trading the pound against the US dollar, you have to be familiar with outlook for the pound and for the US, right? So something to think about. Overall, I think that, that could lend towards more upside for the pound. But I generally wait for a setup on the Edge Finder before really taking trades. We're about 45 minutes out from the US market open. I do have some trades that I'm looking at. I'm watching gold here today. I like the way this candle is closing, and I'll watch that one close. I've got 11 minutes left on the candle. S&P, as I mentioned, kind of on the sidelines for this. I'd like to see either a break and retest or a pullback down to like the 4680s. We'll watch that. Are indices easier to trade in your opinion? Nothing is, excuse me, guys. I'm still battling. Indices are not necessarily easier. It's just a market I'm more familiar with. All right, guys. I think that's my signal. We did 30 minutes. My voice is not given just yet. I appreciate you guys for hanging out with me, sticking around through my terrible sounding voice. If this stream was helpful to you in any way, shape, or form, make sure to hit that thumbs up button. And if you want to try out our software, which we discussed in this video or in this stream several times, if you want to get your hands on this, trial it out for 30 full days. We have a trial available. Click this link. It's right there. It's in the chat with you right there. Again, 100% recommend you to give it a trial if you have not already. And if you want to hear about our pricing and current discounts, we're going to drop a link here. Julie made a great point. If you like the stream, it'll help to heal me. I'm like an android at this point. If you guys would like to access the Edge Finder, we have huge discounts going on. If you shoot us a direct message on our website, clicking this link that we're dropping here in the chat, click this link. It will give you pricing details. You can speak with a representative on our team about the software so that we can make sure it's a right fit for you. We don't want to sell it to you unless it actually is something that would benefit you in your trading and you take this stuff seriously. We're not looking for people who are looking for easy answers or cheat codes in the markets. None such things exist. But if you'd like more data in your trading, if you'd like to use the tools that I do and that me and my team have worked diligently to build for you guys, take advantage, get a huge discount. Send us a direct message here using that chat link, and we'll go from there. Thank you guys very much for tuning in. Have a great rest of your day, and see you back tomorrow.
Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.